All right, guys, it's Sunday, May 7th, the first full week of May, right? Well, we're basically getting into the second week of May, but it's important that we really talk about what's going on in the market. I'm going to get ready to really get into some good trades set up this week. Last week was a lot of volatility, a lot of unexpected high volatile news with the FOMC, and then we had a non-farm payroll. Now that we got that out the way, now it's really about getting into some trades so that we have a high probability of win rates and some outcomes in here. So we will definitely get into the charts. So if you got your pen and paper ready, let's get into it. If you're watching this recording, hopefully you're watching it sometime on Sunday or early Monday or late Sunday night, depending on where you're at around the world. Hopefully you can really take some copious notes on some markets and outlook that we're looking at. It's very, very important, especially if you're doing full-time trading, or even if you're just looking at your favorite pairs. Very, very important to make sure you take notes, very, very important notes in terms of the highs and lows and supplies and demands and directional bias and particular levels that may that be aligned with your trade setup or your watch list, and making sure you're taking a holistic macro view of the market. That's what we're doing right now. We do this every week. I do it every week, so I might as well just record it so that you guys can use it for your trading. And then in our live trading room with our coaching students, then we really get down to the nitty gritty, all the way down to the 15-minute time frame, where we're taking live trades with the best of the best setup, step by step, using a lot of other tools, including artificial intelligence, to help us give us a predictive highs and lows of tomorrow, as well as looking at commitments of traders reports and looking at analysis from sentiment levels, as well as seasonality. All of this, right, to help us give us some pretty good results. And of course, with our technique and our strategy, where we are winning, whether we are wrong or right, or right or wrong. And that's a good thing, because we're able to trade with an insurance, right? We're able to trade that says, hey, if we're wrong, what do we do? Do we just kind of give up and throw in the towel and let it hit the stop loss and try to frustratingly try to trade another position and 3 or 4 or 5, 6 trades in a row? Or do we trade with an insurance just in case we're wrong? We'd rather have it and not need it than need it in which we have it. So if we're able to hedge, it's one of the ability. It's one of the things that's allowed with brokers. Why aren't we using it? So that's how we do it at FS Prosperity. So just real quick, from a disclaimer standpoint, everything we share here is for educational purposes. Nothing here is to misconstrue, to take any type of trade, follow my trades, or execute any trade exactly how I do it or what I suggest or recommend from what I'm seeing. This is just an analysis of looking at the market, whether you're a spectator, whether you're an observer, or whether you're an actual trader. This is just for educational purposes. Now, how do you misconstrue that information is on your responsibility. I would suggest to make sure you're using risk capital, you're practicing on demo, you're paper trading, and you're at least taking and learning a skill from someone who knows how to trade, who's been through the trenches, who's teaching you, who knows how to mentor you, but also actually trading as well, and not someone who's just trying to trade your course. Okay? So now that I got the disclaimer out the way, let me go ahead and switch to the economic calendar, see what we have going on for this week. So let's see here. Oh, let me go to the next week. Okay, here we go. So what do we have for this week? So it's Sunday, nothing. Monday, nothing. You can just see Sunday, Monday. This is going to be a low volatile week compared to last week, but it will start moving. And that's how the market's already been declared in terms of direction, where it's tended to go. This week, it's just going to be more about going with the flow. So this is a good week to really start turning up some trades, right? But lightly, slowly, gradually get into it. Okay, on Tuesday, Nothing major, nothing critical. All you're going to see on Monday and Tuesday is basically trap day and the setup for the rest of the week, your normal ebbs and flow of the market, your normal average daily range. So on Monday and Tuesday, there's nothing critically that you need to be at your certain chart to follow a certain pair that's going to be doing something crazy on Monday and Tuesday. Okay, that's a good thing. So now we get into Wednesday when the central bank starts getting busy with a lot of the orders. And our first order of business is going to be CPI, right? So we got the CPI news. Oh, let me go ahead and get a different color. So at 8:30 a.m., this will move the currency, CPI. It will move the currency. I don't know what the hell CPI is going to be, right? I don't know, and I don't care because here it is. It's saying that we're basically at 5% and we're going to stay about 5%. Okay, that's great. But all I want to know is how is that currency going to react in the market? And that's what we got to be ready for. Now, if you're trading with a stop loss, good luck. You know, hey, hopefully you are trading lightly and you're not afraid to take another trade. But for everyone else and my coaching students, if we're wrong, we'll hedge it, we'll insurance it, and then we'll go ahead and get after the trade and we'll catch the next zone, right? And we'll make money either way, right? So that's a great thing. We'll trade without stress. We ain't worried about it. We already have a plan, 2 to 3 steps. Whatever happens, whatever direction the market wants to go, we'll take it either way and we'll roll with it, right? While everyone else is getting stopped out and manipulated and frustrated and losing money and afraid to take another trade, we're still trading. We trade lightly, we trade with proper risk management and controls, and we use our trade methodology to control risk and manage and control and manage risk. Okay, so that's on Wednesday. Nothing in London session. Getting into the rest of New York session, that's it. Just CPI on Wednesday, who cares, okay? On Thursday, it will be basically pound in London. And this will be their monetary rate statement for Thursday, okay? So they're at 4.25. They're expected to come in at 4.5 to 0.25. It will move the market. So anything with pound will move. So we're talking about pound dollar, pound JPY, pound NCD, pound odd. All of this will move the market. Now, the only thing we know is from the fundamental perspective is that on Thursday at 7 a.m. Eastern time, right? New York, this is my time. If you are in Forest Factory or any other news calendar, make sure it's to your local time. But on my 7 a.m. Eastern time, which I will be up, which I will be on the chart, which I will be looking, and I will be trading my positions, right? Because when this market moves, I need to be ready to exit my trade, hedge my trade, add to my trade, whatever the case may be, okay? But we will be able to look at technically leading up to Thursday, right? Monday today might be a little bit too early, but as the days develop, Monday, Tuesday, as the market starts to more develop, we'll have a very clear picture on what Thursday most likely will be, right? So you want to be able to look at your charts every single day as this market develops, at least on the daily candle, to see where this market's going. I'm going to be able to look at it today and tell you what it most likely might be doing as of today, but that can just totally change after Monday and Tuesday. Coaching students on my trade room, we'll look at this on Tuesday, Wednesday, and we'll be well prepared for Thursday, okay? So that would be on Thursday. And then following that, around 8:30, we'll have a core PPI, right? So these are two economic inflation, I would say inflation, two economic data, CPI is the inflation, that will move the market for the dollars. So whatever happens at 7 a.m., going to turn around, boom, it's going to happen right at 8:30, right? For like pound dollar, for instance. So this is expected to come in around -0.1 and a +2. Well, I tell you what, if that's the case, that should be good for the currency, but we'll see. But we just know on Thursday, dollar's going to add some volatility. So Tuesday, Wednesday, and Thursday for dollar, it's going to move the market. And it might move the market in the direction we're looking for. And we'll take a look and we'll see where that might happen. And then, of course, we have unemployment claims that's coming in at 242. They're expected to creep up a little bit, which is not a lot, 245. but this will move the market. If you're looking to get into any type of dollar crosses, Wednesday and Thursday is the day to do it. Monday and Tuesday is the day to look up for the setup. Okay. And that would be it for the rest of New York session. And then get into right before London session, we'll have some New Zealand dollar inflation expectation news, and that will move the market a little bit for New Zealand dollar, for like Euro NCD, Pound NCD, that way, NCD JPY, NCD USD, that will move the market. And then we'll fall off for Friday with Pound GDP during London session. I really don't care what happens in there. It's going to be GDP news. It'll be some volatility. It'll be some fake outs. If you're trading London breakout, this will get you. So just be very careful, especially on Friday. Friday is trap day. And then at 10 a.m., which is basically just at the tail end of London session, right? London ends at 11 a.m. Eastern time. It'll just be for 1 hour just before London session. This will basically affect more about indices more than anything. The dollar would pretty much been already decided and moved all darn week. Okay, so I'm looking to take some pretty good trade setups. That's what we have for the week in terms of volatility and those days. So just remember, nothing on Monday and Tuesday from a summary standpoint. Just to recap, Wednesday we have CPI. That's it. Thursday we have Pound Monetary Bank statement. Okay, so that will happen at 7 a.m. So we got to be ready for that. And then at 8:30 we got the core PPI. So they will move all the pound crosses, and all the dollar crosses will be moving on Wednesday and Thursday. And then on Friday, a little bit more pound news. So whatever happened on Thursday could be a fade or continuation on Friday. Either way, we got to be ready for it. Okay, so that's all we have for fundamental. Okay, let's go straight to the charts. Get straight to business right now. Okay, let's look at the dollar. Hold on, let me get a drink of water real quick. All right. Okay, so here's the dollar charts. We got it on the daily, and I got my levels marked up. We trade supply and demand. We don't trade support and resistance, even though we're aware of it. That's where some of us will probably add to a positions, or get ready to be aware of our positions, to either get ready to add another level or take away another level or exit some of our positions. Okay, so supply and demand is where we're at. These are my levels on the daily. And what you can see right now is the market has went all the way up, came all the way back down, made a rally, grabbed up some more orders, some more sell orders, right about here, right in that supply. And that supply is pretty strong in terms of a lot of supply levels, right? Came all the way back down to these demand level and grabbed some more buy orders. And it's tapped it again, and it tapped it again. So let me zoom in and tell you what I'm talking about. So you can see right here on the daily, grabbed some more buy orders, went straight up to the supply level, went straight down, grabbed some more buy order from those sellers who were going down as the market was going down. Retail traders are selling, and then you probably got some more sell orders here. Went back up, grabbed some more sell orders, grabbed some more sell orders. Okay, so this level is getting weak, getting weaker and weaker and weaker, meaning it's going to eventually break through, right? So it's getting prepared right now. And that's what we mean by supply and demand. It's really a supply and demand theory based on filled and unfilled orders, okay? Now, what I have here is I got this market to bounce back up, not because it's just bouncing off of supply and it bounce off demand. None of that, because you can just look at this market here, and obviously it's in a downtrend. Okay, it's in a downtrend. and it's hitting this demand level quite a few times. Now, if you would look at this alone, you really can't really tell at this point where the dollar went up, came back down, non-farm payroll came back down, and it's hitting at a low right now. You can't just look at the dollar alone and go, it's going to go down. Well, it's going to go up. It's going to go down. It's kind of a weaker demand level. No, it's going to bounce up because it's really at a support and it's strong and it's getting stronger. That's why it's rejecting. You see all of these arguments and you start to second guess yourself. You start to get analysis and paralysis, and therefore you're unsure and you get scared and you get concerned and you end up not taking a trade, and you were probably right and you were probably wrong. Either way, it's really hard to look at the dollar index alone, is my point, to be able to determine exactly what this market is going to do, right? We have 3 days, one, 2, 3, we got 4 days. Sorry, 1, 2, 3, the fifth was Friday. So we got basically 1, 2, 3 days. This market didn't do anything. It just, that was a high, that was a low. And it did it 3 days in a row. But now we're sitting at a low. That's because that's where it closed. It closed at a low, closing a bearish candle. But these two candlesticks are indecisive candles, is what I'm saying. It's not a bear candle like that, and it's not a bull candle like that. These are decisive candles. These bodies are greater than 50%. The greater there is, close to 70%, the more institutional, clear direction, decisive it is. For instance, like that. That's a clear bull. That's a clear bull. That's a clear bull. Okay. Candle like this would be a clear bearish candle. This is pretty good. These two are very clear bearish candles. That's a very strong institutional push down. This is a very strong, decisive institutional push up, and so forth and so forth. These 2 days candle, we're not sure exactly what's going on. So for me to sit here and just look at this market alone and just look at this chart alone, it would be injustice for my own money, my own risk, and to my clients and to my coaching students to tell you, you should be going up, you should be going down, right? You can't just look at this chart alone. Sometime you can look at this chart alone and say, okay, this market is going to do this, this market's going to do that. For instance, if this market is here or here, we can say, hey, this market is going up. It's strong. Or we look at these two bear candles, we can say, oh my gosh, this is breaking structure, it's coming down. And sure enough, this is coming down, this is going up, this is coming down, and this is going up, this is coming down. These two days candles, it's going sideways. It's really not sure what it's going to do. So we have to be able to look at other correlated resources or uncorrelated resources to help us, right? Of course, if you have access to artificial intelligence like we do with our proprietary company software that give us a predictive high, predictive low, that certainly helps. But if you don't have that, you can look at other things such as uncorrelated markets, S&P 500, gold. You may have to look at other correlated pairs and uncorrelated pairs to kind of help determine where the dollar most likely going to go, okay? Now, of course, you can go to the Commitments of Traders report to COT and look at where the institutional traders are mostly doing in terms of going long. There's more contracts going long or more contracts going short, right? So looking at my sources, I can tell you that I have the Commitments of Data reports, which is kind of a smart money tracker resource that we do share with our coaching students. It is telling me we are basically about 66% long versus 33% short from an institutional trading perspective, okay? let me just repeat that one more time and write that down. We got 66% long contracts versus 33. Is that what I stated? I think I said 34. Yep, 34. 33, sorry. 33, yep. 33% short. So this is saying that based on the commitments of traders reports, which is public information, you can always go to COT.com and look at that report and look at what the dollar is doing, and you can put together and piece together, which, you know, we have a resource that's able to do that in a summary. But looking at that, it's already given us from institutional and banks and hedge funds and managed asset funds companies are putting a lot of the contracts on the dollar at 66% long versus 33% short. Do you think that is one strong confluence information that would support the bias that the dollar is possibly going long? And I think just looking at that and knowing that there's a public COT report, commitment of traders, that gives you positions of institutional traders and hedge funds, where they're going, you may want to kind of follow or start looking for clues to going that way. So we're going to do the same, right? It's no secret. It's no top secret sauce. It's not, you know, nothing that no one's teaching. It's just something that if taught correctly, and if you got the right group and the right trading group and the right company and mentorship, of course, then you're getting the right information. Because if you just look at the chart alone, you're not really sure what the hell is going to happen, and you'll be late because you're going to have to wait for a break and retest or a reject and retest. So with the 66% long versus 33% short, we look at that and I can say, okay, so this dollar most likely could be going long, but we also have to make sure we're using confluences and see if that makes sense into correlated and uncorrelated markets, right? And we'll take a look at that. So that's what we're seeing right now. So if that's the case, and the commitments of traders reports are showing that institutions and banks are most likely going long, let's go with that bias for now. So if that's the case, that means we would need to see a break of structure, right, to confirm that. And that break of structure will be right at the previous high. Just let's say right there. That means we would need to see a break of structure that goes up, it retests, and it stays above, and that means we're going to the next area of supply, which is right here, but we do have some imbalances, meaning this would be a stronger demand supply area, okay? Very, very strong supply area. That means we could be coming up into this area if this bias proves itself, and we will evidently see that on Monday, Tuesday as it develops, but definitely by Wednesday and Thursday, because we have the two CPI and we have the PPI on Wednesday and Thursday. Everything I just showed with you is what we teach, and it does come with experience, right? But this is very, very key information to be able to determine your bias, because you have to be able to determine the direction and timing, right? If you're just looking at this chart alone, you'll be just gambling. You'll be trying to take a short there, get a snag there, liquidity grab, and then you get stopped out, right? Or vice versa. It comes up, it snags you there, and it gets you stopped out. Either way, this is a very dangerous position. You would have to wait for a break of that structure, or if this level is truly ready to be weak and broken through, then it's ready to fail, and then that means we can expect dollar DXY weakness for the remainder of the year, right? Because that's what's eventually is going to come. And the reason why is because we have a higher probability that in June FOMC rate decision, we are most likely going to see a 0% increase in the interest rate, and therefore this will confirm a Fed pause. But right now, no one knows for sure exactly, but right now there is a high probability of a survey that believe, based on Fed Powell's recent and the Fed minute, that the economy is improving or slowing down, and the recent interest rates is improving or helping the situation to bring down inflation, which we will see on Wednesday with CPI, and therefore no interest rate is needed. Okay, so if that's the case, then Fed would be more of a Fed pause, and that will probably be the nail in the coffin that says we are basically done with interest rates for the remainder of the year, as they have already communicated and indicated that for the rest of the 2023, no more interest rate change and increase, and they have not hinted to anything in regards to reducing interest rate, which will further decrease the dollar, which I'm expecting and which kind of been alluded to or communicated to, that we most likely won't start to see a decrease or monetary easing of the interest rate until 2024. Okay, so we're going to be ready for that. We're going to make money whether the money's going up or down, but it's very, very important on what I just said, if that is what you're looking for, and it's very good educational information. Okay, so let's go with the bias that says, hey, the dollar look like it's going to be strong. We're going to follow COT reports, and we're going to look for confluences into correlated and uncorrelated report. But if the dollar keeps the break of this low, whether the COT is right, price is going to do whatever is right. Right? The price is right, not the COT, not our analysis, not Leonard, not you, not anyone else other than price. So if price breaks and price holds below this level, I can tell you that this will be going down, okay? And it will be going down to this demand level, okay? That's where the next demand level was at before price went up, and we can probably get a nice little pullback, and we're gonna keep going. Right, and everything would support that if zero interest rate and Fed pause, and then finally getting into 2024 with cutting back on interest rate. This would slowly and surely demise the dollar, even further weakness down to pre-2022 levels. Okay, but as of right now, I think there's a little bit more dollar strength, and I would support that, but I don't think it's going to come to there. It may come to any one of these demand levels. If price does break the structure, hold that level, we will go past that. We will most likely come here, and this is a very high likelihood as well. So any of these areas is where I would like to do what? Flip and go short. Okay, but in the meantime, I think we're going to be going up for the next couple of weeks, maybe for the remainder of the month, right? So let's look at the other correlated markets and let's see what that's going on. So let's go to, let's see, S&P 500. We'll start with that. Okay, this is on the data. So what are we seeing here? We're seeing some supply and demand zone. This is supply. This is supply. We got demand right here. And this is on a daily, right? Meaning this was the all-time high of S&P 500 for everyone who was having some awesome 401k results. And then we just slid down, and we slid down of about a good, healthy 27% bear market, right? Which is the typical average between 27 and 34%. 27 and 34% is the typical average for a bear market. We did that. Okay. We came back up, and we came back down, and it looked like a little better, and it came back down. So this is a little bit of an equilibrium in this area as we're in this, what we call range, right? Now, as you can see, where we're coming here and we're getting some sell orders coming back, sell orders coming back, we got buy orders, and it looked like we're back into grabbing some more possible sell orders. This was a great push down, so I can see where there might be a lot of sell orders that still need to be filled, and therefore we may see a little bit more lower prices. That's what price is looking to do. However, I can say that if we have price break this level, then we are definitely back to going to these supply levels that were basically right after this crash here. And then we can say we are in the road of recovery. This will be the road of recovery from our, big drop of the bear market. This would be the road of recovery, and anything above this would be history, right? This would be full recovery. This is recovery from the bear market of 2022, 2023, right? This would be going into road of recovery. But I don't think we're quite there yet, and I don't think we're quite ready for that yet. So let's look at this a little bit more. So right now we can see, again, we're at a very key supply zone. Obviously, it's very, very clear. That was our supply zone before it went down. Came back and grabbed a little bit more sell orders, a little bit more, a lot more. Now, everyone who bought there, unfortunately, you were probably liquidated there, liquidated there, there, and there. Okay. Now, the market on this daily candle on Friday did rise, right? So on Friday with non-farm payroll, we did rise, but we still didn't break this area, and we still didn't create new highs. We're still in a very key supply area. Okay. So this is, again, if you're just looking at this one market, is it going to go up? Is it going to go down? That is a very clear institutional candle, but we still don't know exactly what's happening because it still has not broken this area of supply, right? And we still, if not fully away from that area of supply either, because we got a bull candle. So it's not like it's one of these bear candle like that, right? If we had one of those bear candles like that over here, then I would say this is clearly breaking away. So I know it's, who knows exactly what's going to do. But having said that, we know what the COT, the Commitment of Traders reports, is saying with the dollar. And if the dollar is pointing that it could be stronger at a 66% long contract, well, this is inverse correlated, meaning we may not be yet ready to recover, and therefore we may be coming down to lower prices on the S&P 500, which there is some reasons why we could come back down. We do have some imbalances here that could get filled, and we have this area of demand that created those decisive impulse candles that created those imbalances of a bunch of buyers. This, my friend, is a very strong demand area, okay? We had that strong, the lower demand area that was right here. And these are some orders. A lot of orders got picked up here. So price could come down. It could come down, but it doesn't really need to come down if there's no imbalances and if there's no left unfilled buyer orders. However, this is a good area where it could come down. Okay, so with that being said, I am bearish and I'm looking for a rejection of the supply zone, and I'm looking for lower prices on S&P 500, and therefore I am looking for price to come down here. And if dip breaks and it does not hold, then I'm looking for price to come into that area, into that zone is where I'll be looking to buy, right? This would be my zone area to buy, and I think that would be a good discount area that I would want to buy, right? So this would be in our discount zone. Retail, I'm not into buying retail. I don't like paying for things that are expensive. So if you like paying for things expensive, that's okay. I will sell it to you. Right? I'll sell it to you, and then when it comes down, you can buy it from me at lower prices, right? So that's what I'm going to do, and I would expect you may want to sell something that is highly valuable right now. And this looks like a very strong area. Whether it holds or not, it's uncertain at this time, but we will be able to tell on Monday and Tuesday. So if you wanted to be more conservative and wait, you're certainly fine to do so. If that's what you do, then you're going to want to wait for this area to hold and reject and retest to come back down. I'm willing to short it and be bearish and go ahead and hedge my positions if it goes up and we are in the road of recovery. And I can be completely wrong, and that's the case. I'm perfectly okay with that, and I'll manage my trades either way in the end. Okay, but other than that, I'm bearish on S&P 500. Let's look at the other correlated market, which is gold, and let's see if we get more evidence of what's going on. Okay, so this is on a daily, and this is gold's all-time high, right? Yeah, this is an all-time high gold prices. So let's look at this. All right, let me hide some markers here so that doesn't confuse you. So with that being said, we shorted gold up here, like I called it last week Sunday. So I think I made like 400 and something pips and got out of it. So gold dropped from here to here. 490, yeah, I got about 450, 440 out of that. I didn't catch the absolutely high, and would definitely fall from the absolutely low. But that's not bad, right? 440 out of 490. You say I got to get 80% of the move. Oof. Not a lot of people not even able to get 10% of that move, right? And I did call it short. And I would say I am still short from this supply zone. Oh yeah, this is definitely looking to come more down. I would be more bearish than I am. This is still to me kind of a high price, especially right now at 2016. We're just coming off the 2067. There is some very strong area of demand down here. This is at least going to come down to this level right here, this demand level, but I'd like it to come down. Believe it or not, you see these imbalances here? Wow, these are some clear imbalances, and I can see where price, where it bought up, these were very clear institutional activities, very, very clear. In fact, it was so clear and so much buyers here buying up price that there's a lot of unfilled buying orders here as evidence with imbalances. So will price come all the way down there? I'm not quite accurately sure right now, right here. I can't foresee the future, but I can tell you that when prices at a retail, it needs to be rebalanced, right? So with this swing high, this swing low, let's just take that threshold there. And we're still in premium. This is high, right? This is the equilibrium of this swing fractal here. So I would like to see prices come down here. And I think price is going to keep coming down here. So I will be looking to continue to short gold until we get in this area. Once we get this area right here at the 50% mark, which is right in this little demand area, I can probably see a little bit of vegetation, something like that. And then possibly a little pullback. And then I'd say over the course of the month, this looked like it's going to come down. I don't know if it's going to come all the way down to this weekly level. I think we pretty much caught a lot of the orders there in terms of the buyers. So I think we might be basically done in this area, right? So I think this is pretty much done. I don't think we're going to come back down here. We do have a little bit of imbalances, but I can tell you that we'll probably eventually come down here sometime in the future, right? No. Okay. Now I can be completely wrong and price can come all the way down here, and that's that's okay. I'll just continue to trade it. If I get long here, I'll hedge it and continue to manage my trade and get out of it. But price does come up and down, which is great. But in my viewpoints right here, from a technical standpoint, price at 1928 is very highly probable. We're definitely going to come down to 1928 if the dollar gets strength. 1930 is going to be the level. I like to see prices come even low as 1840-ish, 1848, 1840. Okay. So I'm bearish on gold, and I like to see lower prices. This is going to be a nice swing low, and whoever's able to pick up at a very good discount price on gold, you are going to make a lot of money coming back up, because we will exceed this, as this is the all-time high. But key supply, nope, I can't buy at a key supply area, especially at an all-time high. That's my trading rules, right? So my trading plan, you don't buy all-time high, and I don't sell all-time lows. Okay, so we're going to look for a rebalance. We're going to take a discount, and we're going to buy a wholesale at lower prices. So I'm bearish on gold. Let's look at oil real quick. Oh, let me come back to oil. Let's look at Bitcoin. That's a good uncorrelated market to the dollar. Okay, what we got here? This is what I think you got to get used to it. Supply. Look at this one before it sold off. It hesitated. You can see that, right? There's hesitation. Boom, sold off. That is supply. Yeah. And it came all the way up, hesitated, and sold off. What would that be? Supply. Yeah. Got a little one here. This is a major one right there. I'm gonna put a minor one right here. And then we got Bitcoin way up here. All right, back in the $69,000 mark. Those are all supply that we're gonna be hitting along the way, right? So Bitcoin did not break what I did not expect it to break, and it's been holding, right? It did not break below 27, and price is right back to 29, 29.8. Okay. So with that being said, I think we're going to continue to be in this range. Let me go ahead and remove that, because I don't think we're going to come back low again, below that, right? That's what I'm thinking, but you know, anything can happen. I think we're going to stay in this range a little bit. So the range I'm talking about, I could see it coming down as low if it wanted to. All right, that is a very small demand area. So I could see price come down to 25, but I don't see it breaking below 25. So I am still bullish on Bitcoin, but I think it's going to be just in this little range until S&P 500 and the dollar breaks either barrier, meaning the dollar gets weaker and S&P 500 gets stronger. And when it breaks that, I think this is going to lead the way. Okay, I see 40,000 probably in the next 2 months that could be happening. So around June, July. I'm telling you what I believe we will be seeing 50,000 price by year end. But we'll be in this range here, because it's coming. It's definitely relentlessly bullish. A lot of things is getting ready to come behind Bitcoin, especially with the halving coming up in 2024. So the bear market, the winter, crypto winter is over. We are definitely in the higher highs, higher lows, higher highs, higher lows. And as for right now, unless anything happens geopolitically, Bitcoin is going to be on a rally. Okay, let's come back to oil. For those who like to trade oil, I like to trade oil. In fact, I might get into oil. I'm going to tell you why. Okay, let's look at the daily on oil. This is oil market. Take a look at it. Okay, now let me mark out supply and demands. demand area, picked up some more buy orders, came all the way up, picked up some more buy orders, came all the way back to this demand area. What? Tell me if supply and demand don't work. Not support and resistance, supply and demand. This was a demand order. All of this with demand. Shot up, came back down, picked up some more demand order, came all the way back down, came right here with a wick. The more demand areas came all the way over here, got some more demand orders. Can you believe that? That was in March 17th, March. And then came all the way back here in May. Yeah, that was Friday, right here. Beep. Where do you think we're going? Yep, we're going to the next supply area, right? So where is that supply? Let's look at the supply area. Starting to see where orders are supplying from, right? Okay, so this is where I'm seeing right now. Oil's right here. Yeah, we're coming back up here. This is going to be nice. So if you're looking to get into oil, you want to test oil, you like to take your whip at oil and see what you can get out of oil. I would say this is a good time to think about getting into oil on a very light trade. If you ever thought about getting into oil, this would be a good time to do it. Okay. This is bouncing right off a very strong weekly demand level, like that. And I don't think we're going to come back down there. So I am bullish on, well, we're going to come back a little bit. So I think we are going to pull back a little bit. We're going to retest this level like we did that. We're going to come back a little bit, come back up. And we're going to go back to around 82 and pick up some more sell orders. Now, if there's no more sell orders here, what is price going to do? It's going to bounce off just because there's no more sell orders? No, it's going to come all the way higher and get the rest of the sell orders then. And see where the next supply level is at, right? It may be here, it may be here, here, here. But what I can tell you from this swing high and this swing low is that this was discount. This is premium. We buy, we like to sell. Okay, so I hope that helps. I hope that makes sense. I'm trying to be very clear and trying to make this simple. I mean, you really don't have to buy any courses if you know the basics to be able to understand supply and demand and just practice this over and over and over again and watch my top-down analysis, right? But if you want some coaching and some very clear mentorship and to speed up your learning curve, we can definitely help you with that to where you can easily learn how to identify this easily, just like I just did right here, right? This is not something I was able to do and just woke up one day and said, hey, supply demand, that's the way to go. No, I had to learn this. Someone had to mentor me and I have to pay for that mentorship. And then over years, more and more practice and more seeing the screen time of the markets and seeing I was here. I was trading all the way here in 2016. This is when I started trading. I saw when oil went all the way to zero. It's not showing here on this chart, but it went to zero. And then I saw all of this, and I saw all of that with the Ukraine-Russia situation right here, 2022, and I saw the whole COVID situations. I've seen the market, and I've seen this factor, and I've seen how the market reacts. So supply and demand is very easy for me to see and know now. But that takes practice, screen time, but started with mentorship. Okay, this is oil. I'm bullish on oil and looking to see oil go up, and I'd be surprised if it don't. All right, let's get into some forex pairs, starting with Euro USD. Go ahead and take out some call outs here, so to avoid any confusion. Okay, so what do we got here for Euro USD? Okay, so Euro USD is right here at a very strong supply level. I was doing some markup for the coaching students here. So there you go. There you go, the text. There you go. Okay. So this is what I'm looking at right here. This is a key supply area back in March 30th last year, 2022. We came all the way down. We came close, not that close, came back down, and now we up there nicely. Okay, so as you can see from that supply area, we came up and grabbed a lot of more of additional sell orders, huh? Came here, came back down, came up, came back down, came up, came up. All right. So we're grabbing a lot of orders, and this is starting to be depleted. So this supply level is getting weaker and weaker and weaker. However, there is some imbalances down here, like there's a fair value gap, like move that out the way. There is some very strong demand levels down here. This is a weekly demand level like that. That's where we touching eventually bought up. Euro USD came all the way back up, and it looking kind of bearish, meaning it looking, well, the dollar is strong. Yeah, that means Euro USD could be coming back down, right? We're bullish, but how much more, right? Could this come up more? It absolutely could. It absolutely could. It can come well into supply area, right? But I don't think it's going to quite go all the way up yet, right? So I am looking to go short on Euro USD back down to this demand area and maybe even lower, okay? This is what I'm looking at. So I'm bearish on Euro USD. Let me go to the 4 hours and mark up some levels that, based on the dollar strength, you can see this level right here. This is the demand level that I'm looking at. This is another minor demand level, daily. This is daily. Oh, that's a pretty strong order there. All right, so it looked like that was mitigated. So I am looking for prices not to come all the way back down here to 105. I think this is pretty much wore out now. The demand level is pretty much already taken. Okay, but I am looking for price to come back down to those two levels. So that is, sorry about that. So this is what I'm looking at. I'm looking for lower prices, and you can see where price came back down. We did not take out this high, and it looked like we're creating lower lows, lower highs, right? This is on a 4 hour. You can see right here, we're creating lower lows, lower highs, lower lows. So when I see that, to me, it's showing evidence that price wants to possibly come lower, right? That trend line is like, it's starting to be respected there, right? So I am looking for, you can see price start to come down. I'm looking for this to come lower, right? So I am going to put a pending sell order right there. I'm probably communicate this to my team. I'm gonna put a pending sell order right there. As soon as the market open, I'm looking to take this, and I do want to go lower, right? And if I'm wrong, oh well, oh well. But it won't hit my stop loss, and I won't lose money. I'll hedge it or hedge it. We're gonna make money either way, guaranteed. I'll let the hedge make me the money, and I'll have the hedge lock in my risk of the differences between the two. And I'm looking to come down. So if you guys are looking to do something with your USD, I'm starting to like this. Now, if you wanted to wait until break of structure here, blah, 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 that's fine. Let me go ahead and sell it to you because it's at a retail price from here. Anything up here is premium. I can't buy it. It's too expensive for me. So I'm gonna wait till it come down here. I like this right here. I can buy it here. Anywhere here, I can buy. This is great. It's in my trading plan. I can't go against my trading rules, right? All right, so that's where I'm at. I'm bearish on your USD. And if I'm bearish on your USD, you can bet your dollars I'm definitely bearish on. Let me go ahead and move this so I won't confuse you guys. There's my other call out. Yep, so I am bearish on pound USD as well. You can look at this and say, whoa, what is that? That is supply. Oh, okay. So could price go higher? It could. Well, where's the next supply level? It's way up here. Where's it up? Way up there. Oh, that's 349 pips on a pair that moved about 105, 110 pips a day. It's going to take almost a week to get up there. You think that's going to happen right now? Well, I don't know, but I can tell you with the pound expected news coming up on Thursday, it's possible. And I don't care if it does or not, because I'm bearish because I am banking on the dollar's strength, and I'm going to lean with that. And you got to pick one, right? Or you can just wait and be late, right? But this is pretty strong trend upwards, and I've been watching this, and I'm already in the trade, and this has been going up pretty strong. But again, it's in the premium, it's retail. I can't buy it up here. I should be looking for sell. Okay. Now, with the Friday move on non-farm payroll, this is looking not as hot as it did with the Euro USD. Euro USD got some really good bearish momentum, but this one did take out the high. But I like that candlestick. It's telling me that we possibly in the supply zone. This is the weekly supply zone right here. We may be done. Okay, so we'll see. What I like about it, we got some fair value gap to see that to be closed. We got some fair value gap to see that to be closed. And this is a weekly level here. Let me go ahead and clone that. And that's a weekly level. And I like to see this thing drop. It's way up here. 175 pips. Anybody want 175 pips? I'll take it. Right. So with that being said, I'm bearish, and I like to see pound USD drop anywhere here. If it drops anywhere there, I'll be looking to sell. Ideally, it would be great. But if it drops anywhere in this area, and I see some evidence that pound is getting stronger or dollar is getting weak, then I'll be flipping the other way. If I'm wrong and it comes all the way down here or anywhere down here, then I just cost average it and I'll hedge it. I don't think it's going to come all the way down here, but I can be completely wrong and I'll still make money. I can be right and I'll really make money. Either way, I'm bearish on pound USD looking good. Okay, odd USD. What am I doing with odd USD? Well, let's see what odd USD is doing. Let's go to the daily. Well, we look like we have a very strong supply level there. I would agree with that. Our next supply zone will be up here, and it will be coming. So we came up here, grabbed some more orders, sell orders. We did not take out that high, came all the way back. We came all the way down to this demand level. Put it down here. And we have not taken out that high. But even if we do, we got to take out that high. I don't think we're quite there yet, right? I think based on the dollar strength expected, the commitment of traders report saying that the institutions are long in the dollar. If that's the case, I don't know if I want to go against them. I think I'm gonna go ahead and get ready to short this either here or here, and I'll hedge it up here if I have to. But given that we're not sure exactly where the dollar is going to go exactly right now, I would not suggest on taking trades on all the dollar classes. Let's not be greedy. Let's not overexpose ourselves, because if you do everything on every dollar and the dollar goes wrong, you're going to be losing on every trade, unless you're going to be hedging every trade to be a different story. But I would say pick and choose and select. I think pound USD is a very good trade setup. Euro USD is a very good trade setup. I would not trade odd USD, as it's not as high as it was for Euro USD and pound USD. However, I do expect this to come back down, and it could stay in this range. However, I like that discount range here. I see this as a very strong demand area. And I would say price is going to continue to be in this range a little bit. So not the best place to be trading on odd USD. So this is not something I would trade, but I am bearish on odd USD because it's the dollar strength. But I'm not going to get into that setup. I'd rather pick Euro USD and pound USD. Okay. Now, if you are a fan of odd USD and NCD USD, I would say this is a better selection of the two. Look at that. Nice supply touch. Like that. This is like coming right to the T. Man, this is awesome. I love this whole supply and demand. It's just so much better. Okay. So price could come back down here. We're looking to see price come to the bottom of this range. However, keep in mind there is a couple of imbalances here that could prove that the price does want to come back down and grab some more of these orders here, some buy orders, and come to this level here. So that is a possibility. I'm going to put that as a daily demand level right there. Okay, so I am bearish. I don't think price is going to come all the way down here, but I think it's going to come back enough to be around here. All depends on what day it is. If it's June, we could be expecting NCD to come back up. And I am sticking to this story. I'm bearish on NCD USD. Let's go to the other pairs. USD CAD. What's up with USD CAD? USD CAD is already bearish. Ugh. That means that dollar is that weak. Well, if the dollar is strong, this is a very good area for dollar CAD to bounce back up and be in a little bit of a range, like it was over here, like it was up here, like it was up here a little bit. So I think we're going to be in a little bit of a range. I don't think dollar CAD is a nice setup for me. It was up here. It would have been a good trade. But with the expected dollar strength that could be coming, I don't quite believe we're ready to start dropping yet, even though I know we will. I could be completely wrong, and dollar CAD can drop all the way down here and then create this range. Could be, but I'm not trading dollar CAD. I missed that move. It would have been up here. Right now, I would need to see more dollar evidence. So I'm okay with taking a Euro USD and pound USD trade, but I'm not confident with USD CAD, which would be basically correlated with the dollar. So that means if the dollar is strong, that means this is probably expected to go up. So with that being said, I'd be bullish on dollar CAD. Dollar Swiss French. Now, of the two, oh, this is lovely. between dollar CAD and dollar Swiss franc. This was more of a, this is a lovely pair of the two. I would like this one, and I am bullish on this one for sure. This one, I would not mind taking a trade, especially with that demand level down here. Go ahead and move that down there. I like that one. Okay, so yeah, look at there. Okay, so this is going up. So we are definitely in this range here. I like to see the break of that and see dollar CAD come up to this supply zone up here. Okay, so that's where I'm at with the dollar Swiss francs. I'm bullish. Okay, and I like to see Swiss francs come way up here. This would be my ideal. If you take that swing low, swing high, discount, premium, buy, sell. Yep, I can't sell. I have to wait till it gets up here, and then I'll be looking to sell. So in this area, I'm bullish. Dollar Swiss francs. If I had a choice between dollar CAD and dollar Swiss francs is a better setup. Nice trade. Anything below that, look at, come on. The chance of coming way down here is very close to slim at this point. So I don't see that happening as of right now. So I'm going to put that at the weekly demand level. Yeah, this is the weekly chart, and then down here it's even more. So we just touch a very strong demand area right here. I would say that's a weekly as well. It's a very strong weekly demand level. So I think you guys would agree with me. Just look at that. Came all the way up here. Like we touched this area. That was in 2021, 2 years ago. January 21st, 2021 came all the way up here and it came all the way back down here. I think we're going to come up a little bit more, probably about right here, and then come back down. But it could come all the way back up here, or at least come at that. Some of this imbalance, that's a huge gap. So I wouldn't be surprised for the dollar and Swiss francs push that high, but I don't think that's going to be more about the dollar strength than it is about the Swiss francs weakness. So Swiss francs, dollar Swiss francs, be strong, forever hold your peace. And I think this is going to be a nice trade setup if you are looking for a good choice to trade. This would be a good area. Okay. All right, dollar Swiss francs, let's go. Dollar yen. Okay, dollar yen. I'm expecting dollar yen to, this is a nice supply. Wow, we're really holding this trend line, aren't we? Highs, high lows. Yeah, would you say that? Yeah, I would say it's going to possibly come back up more. I think they got more upside to go. I like that imbalance right there. I like to see it mitigated and then come back down. So dollar yen, I'm looking for dollar yen to come up, and I think it's going to be more about dollar strength than it is about yen weakness. So dollar yen, I'm looking for that to come up. With the yen crosses, let's talk about yen. Euro yen, this is on a daily. Ooh, we're in a very key supply area already. Yeah, I don't see this going any higher. So I am, this is already dropping. We don't come back up. This I see this coming down. To this area right here. Copy and paste that right there. Okay, I'm bearish. Euro yen, how about pound yen? Whoa. Ooh. Orders, sell orders, dropped. Sell orders, drop. That's what I'm gonna go with. I'm gonna go with the drop on this to about that level, and at least to this level down here. That's some demand level down there. So I'm bearish on pound yen. Okay, pound yen, I'm bearish, and I like to see this come back down. I think it's going to be bearish. Okay. CAD yen. Okay, so okay, this is coming back up, and it looked like it's going to come back for some more supply orders. And this is looking to come back up a little bit. I don't think it's going to break this, but I could be completely wrong. But I would say I would be looking to short this. Okay. So in this area, this was a nice drop. So if this doesn't create another higher high, so this could be a lower high, lower low, lower high, lower low. But if it doesn't break that high, then we're coming back down. So I'm gonna be bearish on CAD yen, but this doesn't look like a really good trade setup until I figure out what CAD yen's gonna do up here. But this, I'm banking on CAD yen to be kind of bearish. Okay, so I'm be looking at more bearish on CAD yen, but this is not really a good setup compared to euro yen and pound yen. They look more bearish than this, so this be a trade I would skip. But if I had to pick, I'd be more bearish and looking for more downside on CAD yen. Okay, how about odd yen? Do we got a better setup on odd yen? Oh yeah, I like this one. Okay, so this is looking to think we're going to be coming back down to the downside. This is a very nice wick up. So I don't see odd yen getting any stronger than that. Now, it didn't take out this low either right here. So if it does come up, might come up a little bit. But other than that, I would stay to the downside on RDN. All of this is peak. All of that is peak. All of this was supply, right? And look at all this downside we got potential. That's on the weekly. That would be a weekly supply, weekly demand. This would be a weekly demand level. Yeah, I think with this, what do you guys think? I think this is going to hold. I think this supply zone is going to hold. If it goes a little bit higher, it's not going to go that high. We're right in that this supply level here. This is all supply. Go down to the daily. Sorry about that. Oh, bear with me. I'm marking up my charts here. Yeah, I'm going to be bearish here. I think this is going, if it goes a little bit higher, great. If it doesn't, it'll start to turn around. I'll be looking for more downside on JPY. Yep. We may range a little bit, but I don't think this is going to break this area at all. Even if it goes up a little bit, I'd still be shorting it. So pound JPY and bearish. NCD JPY. Oop, I don't think we're going to go that high. Let me reanalyze here. Okay, so what do we got here? We got a range and condition. NCD JPY is already there. I'm bearish. Yep. And this is a better trade setup than JPY. Just if you go to the weekly, look at your weekly here. Oh, that was a weekly supply zone right there. Boom, look at this. Way back here, back in May of 2015. Anybody remember what you were doing in 2015? Where were you at and what were you doing in life on 2015? So prices came all the way up here back in December 2022, and we've been creating lower lows since. So I am going with the downside here. I have to say we're going to go lower. We got a long way to go down here. Long way to go. I think you guys can see that. Yeah, I think we got a long way to go. Even down here. I'll mark this up right now while I'm at it. Oh yeah. I'm looking for lower prices. Let's go. NCJPY, I am bearish. And if it goes a little bit higher, guess what? I'll short it again. I'll keep shorting that thing. I think, oh my God, look, just think about it for a minute, right here. Just from this swing to that swing right here. So anything in here is premium, right? This is retail. Over here, discount. You would definitely want to sell down here. Now, that's just on, you know, taking the upper fractal, but if you take the whole swing from this swing low to that swing high, you should be looking for nothing else but being short on a swing, from a swing trade perspective, right? But let's not take the swing trade perspective. Let's just take it on a daily, right? And just take it from this swing right here. Okay, anything in here, it's premium. We want to sell. We want to be bearish, I'm bearish, especially on a all-time, not an all-time high, but very key supply area on the weekly up here. Definitely want to be shorting. Okay, one more CFTC. We're in this trade, and we are doing nothing else but shorting. We hold on to our shorts, and we don't want to do nothing else. So I'm already telling you right now, I am bearish already. That's it, nothing else. I'm not even going to go into an analysis on why. I already did that last week, and I'm already telling you, does not matter with anything else, we're bearish. Now, if you go to the 4-hour time frame, we're looking for a little bit more. It came back up. It's in the supply area. So I am looking for price to come into the supply area. And even if it comes up a little bit more, that's fine. It's not going to come all the way up here again. But even if it does come up a little bit more, I'm fine. But I'm right there, and I'm willing to go short more. Okay? So switch friends got a long way to go. We're talking way down here. Got a long way to go. We're talking about another 960 pips over the course of the next 3 months. So CFTC, and the thing is, a lot of people don't know how to trade, I would say, these type of pairs or markets, especially if you're using stop losses. A lot of people go with the old traditional, conventional, never trade without a stop loss, and it's been beat over your head because you don't know anything else. And whoever taught you don't know anything else. They don't never tell you, well, hedge funds don't typically stop loss anything. They hedge. They do? Well, hedge fund manager, hedge fund. Did that ever ring the bell? Why a fund manager be called a hedge fund? Hello? If I got your attention, great. If this is the first time you realize that, even better. Why aren't you hedging? Good question, right? So a lot of people, while it was going up or while it was going down, were getting stopped out, or trying to catch the top instead of just saying, hey, I'm gonna put my sell. If it goes up, I'm gonna hedge it, or if it goes down, I'm gonna hedge it and just cost average it down. But you got to have someone to teach you how to do it, which is the reason why a lot of people don't hedge, because they don't know what hedging really is. And if they do, they don't know how to do it right. Okay. Hedging does not mean put a sell and stop at the same damn thing because you don't know what the hell you're doing. That's gambling. That's foolish. That's not trading. Hedging is a trade management methodology and technique. Very, very different. Very, very important. Awesome. Okay, cool. Now, I've already added positions here. Would I add another one? Nah, I wouldn't add another one up here. If pair goes up here, nah, I don't need to. You could. Not a bad idea. You could. There's nothing wrong with that, but I won't. I mean, I got enough positions here. Now, obviously, I'm trading like a half a standard and standard lots. You know, I got a larger account size. But if you got a smaller account size and you started small, then it all depends on what you are doing for your risk tolerance, for your account balances, and for your comfortability, right? So if you get 0.01, 0.01, 0.01, 0.01, you got room, right? You got room to add. You can go here, 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 absolutely. But if you want a standard here, came back down, you did another standard, you're in the position for 2 standard, you don't need to go another standard, right? So that's what I mean. If you did light, you got more room and you got more bullets, you got more ammos, right? But if you went higher lot sizes because you trade that way, whatever's in your trade plan, that's what you got to do. Awesome. Okay, we're out of the yen. Let's get into some odd crosses, euro crosses, pound crosses, any crosses. Let's see what we're doing. Let's go to the daily. What this thing's looking like here. Ooh, your odd drop. I hope anyone took that trade from the last time I called that, because it dropped a nice 478 pips. Awesome. Anyone? Anyone got awesomeness on there? Anyone? No? Okay. Good trade. Called it. I'm not gonna go way up there for now, but I wanted to mark this off so that everyone can see where we are calling the support. And this is support way up here. Nice. We got that as a weekly supply. We're gonna go ahead and copy that and paste that over here. Weekly supply level. We agree with that. I like that. Kind of come back up. Boom. And we are going lower. Bank on it. There we go. This trade is far from over. That's a good thing. So if you're looking to a good trade setup, this is still a good trade. Nothing wrong with this at all. Daily demand level there. And the next daily demand level is right there. So if you like a euro odd and you like a little bit more excitement, this is a good trade setup. However, expect ranging conditions too. The thing can come up still. And you'd be like, damn. So, yeah, well, down if you put a stop loss. Yeah, absolutely. Come on. Seriously? This thing already dropped 426 pip. What do you expect to do? Put a stop, put a sell now, and then put a stop right here, and you think you're not going to get stopped out? This thing can still come back up and get more sell orders. So you can put a sell order, you can put a sell order now, sell order here, sell order up there, sell order there, hedge up here. You got to be able to trade that way. If you're not flexible and you keep yourself in a box, guess what? You're going to get trapped in a box. All of my coaching students should know better. That's what we trade. Well, they got to go through the coaching lessons and got hours and hours of coaching lessons, right? That will put you to sleep if you're not looking to take this serious. It will put you to sleep if you can't see yourself doing this for life. It will put you to sleep if you have no desire for freedom and knowing that it takes work to go through it and get it done. Anything worth having is worth doing the work. I promise you, and I can assure you that. You're odd, I'm short. Pound odd. Well, guess what? I'm short. I can tell you that. Look at this. I'm bearish right here. Nice weekly supply level. It's already dropped 296 pips. Let's go. Go ahead and put this command area right there. We got another one right there. I don't know one down there. Okay. So that's where we're at. So I'm bearish on pound on, euro on, and it's looking good. Now, that doesn't mean, again, doesn't mean I won't pull back. Be ready for it. Okay. I think it's going to come to this level, equilibrium. This is retail. You want to get into the discount area. Euro odd, pound odd. Okay, euro CAD, pound CAD. Let's look at this for a moment. Yeah, we're done with that. That's not happening. That is not happening. Okay, we came into the supply zone area and we dropped. What? 343 pips. Man, I missed it. I missed it. Sure did. Okay, so we are definitely coming down. And the point is, how much? That's pretty deep. I don't know if it'll go that deep, but I know it'll go deep enough. And we'll track it each week. And if you like to get into this trade, then this is a good time to still get into it. Not too late. Okay. I don't know if it'll come all the way down this low, but this is a very strong demand area. It looked like there was a couple orders here, but for sure, it's definitely looked like it's not done yet. It's going to come in this area, probably manipulate a little bit, range a little bit, and then drop a little bit more. Come into this area, drop a little bit more right here. And if it breaks right here, then it's coming down even lower. Okay. All right. So a couple more pairs and we'll be done. Pound CAD. Yeah, it just looked like it didn't go all the way up to the top of the area. It doesn't even have to be. Doesn't have to be all the way. Okay, so how far are we going? As far as I can see it going. And we'll determine what happens after that. So, pound Canada, Euro Canada. Oh yeah. Look like more downside opportunity. How about Euro NCD? Look at this way over here. Sort of way over here. Back in 2020. What do you think? Did we hit it? Wouldn't it be nice to put a sell order right here? come all the way down, or when it came all the way here, put a buy order and put a TP here and just wait, go on vacation, come back and know that you made money because that was a strong supply area and you understand supply and demand. That'd be nice, right? Okay, guys, so let's see where I'm at. Okay, this is a nice demand area. I think that looked like a weekly demand. Nice. That's another one down there. Okay. So this pair has already moved. Ooh. The thing's going to come all the way down here. It's going to come all the way up here. That's a nice weekly supply level right there. Right there. Daily supply level. Okay, so this pair has moved for 579 pips. Congratulations for all those who traded Euro NCD and took my recommendation. So I think this trade got more room to go. I think got more room to come down here. And I think that's about it. Let's go to pound NCD. All right, so nice supply, nice supply. I like it, I like it. Weekly demand level there, supply level right there. Yeah, we're coming down more. Okay, so on pound NCD, your NCD moved a lot. So I think pound NCD still got some more room to go. So 387. So we got about another 444 pips to go on pound NCD, more downside movement. I think we're going to come all the way down here. This is a nice range. If you look at this, you can see it right there. All here to here. You can see that range. And I think we're going to continue to be in that range. You can see it clearly on the weekly. You see that? All of this is getting this liquidity down here. All of this demand area. Okay. So we got more downside, and it could come all the way down to this weekly level. This is going to come down, up and down, up and down. So your NCD, pound NCD, I like to see that go down a little bit more. However, it could pull back. Don't get me wrong. It could pull back. And you know what's funny? It could come all the way back up here. Or it comes down. It can go all the way back up to supply level and come all the way down. So if you put a sell here, we're going to put your stop loss here, way up here. Are you going to wait till it comes up here and then put a sell and put your stop loss right here and it comes up and still grab your stop loss? You see what I'm saying? Very difficult, very frustrating, right? Now, obviously, you can wait for a break of structure. I would have shorted it up here. Now, you can wait for a break of structure, come back up, come down, fake you out, come back and come to the supply area right here, right? Because this is now a supply zone. And that's a daily supply. Now what? comes up here and stop you out again. So you got to be very careful, very careful. So if you wanted to sell, you could put a sell order here because it came up here and I think it got more supply to come up here. That would be my best bet. But other than that, I am bearish on pound NCD. Okay, let's look at a couple more pairs and then we're going to go ahead and close out this call. CAD Swiss francs on Bill Bullish. Nice. Let's go. Look at that. Nice. Finally got a break. Isn't that awesome? So if you were to short here, and you short it here, and you short it here, you should be at break even with this short. Now, if you want to get some hedges along the way, you made money too. But this finally, after, let's see, 2, 3, 4 months of just nagging short, lower, low, you're finally going to be able to break even out of that trade. That's what happens with these type of pairs, CAD Swiss francs, NCD Swiss francs, and those pairs, they move very slow and they range a lot. Okay, euro pound. Oh, finally, lower prices. And it's coming down. There we go. Okay, euro pound, I'm bearish. Been bearish since up here. Okay, euro pound, lower prices, going down. Pound Swiss francs, I am bearish, bullish. Yep, bullish. I'm still bullish. Pound Swiss francs coming back up. Next one, odd CAD. Oh, more downside, baby. Let's go. More downside. It's getting. It didn't break that structure. It's coming more downside. Okay, NCD CAD, and I'm going quickly through these pairs because I don't trade these pairs, but I do look at them and I wait for the nice setup when I do see them. I'm thinking this is going to go down more. Yeah. You guys see that? Or it's just me? Nice channel. Nice demand area right here. Okay, so NCD CAD, more bearishness on the downside. Odd Swiss francs. Ooh. Swiss francs is getting weak. Yes. More upside on bearish odd Swiss francs. Hope you're in a buy. NCD Swiss francs. I'm bullish. Oh, yeah. Ooh. Boy, did that shoot up. Did anyone buy there? If you did, congratulations. Especially from down here. Congratulations on here, 60 pips. And see Swiss francs, we got a long way to go, baby. Okay, Swiss francs is going to be done for a while. And the Swiss francs is going to be weak. Okay, odd NCD. We're going to be ranging a little bit. I think we're done with this. Yeah, so I'm going to be a little bit bullish on odd NCD. Okay, on Euro Swiss francs, you know it, bullish. Okay. All right, everyone. So that is it. That's all we have for today. Hope that quickly went over some of your key setup for your trades. and hope it help you with your watch list. And Coach and Janice will be looking at some of the trade setups live on Tuesday, Wednesday, and Thursday. Good luck and be careful with your money and continue to trade and continue to practice and continue to build your business. Okay. Other than that, you guys have a great day. Enjoy your Sunday, and the recording will be up shortly. Okay. Bye-bye.